Hello and welcome to the latest news update on Canary News. Nvidia experienced a significant surge in late trading following the release of yet another impressive sales forecast, further propelling its status as the world's most valuable chipmaker. The company announced on Wednesday that its revenue for the current period is projected to reach approximately $24 billion, surpassing analysts' average prediction of $21.9 billion. This forecast, along with the fourth quarter results that exceeded Wall Street estimates, underscores Nvidia's consistent trend of outperforming expectations. This success is largely attributed to the soaring demand for its artificial intelligence accelerators, highly sought-after chips utilized for data processing in AI models. These accelerators have been instrumental in driving the proliferation of chatbots and other generative AI services, capable of generating text and graphics based on simple prompts. Nvidia's CEO, Jensen Huang, emphasized the unprecedented demand for accelerated computing and generative AI, stating that it has reached a tipping point with surging demand worldwide across various sectors and regions. In response to the announcement, Nvidia's shares soared by as much as 11% in extended trading, further solidifying its position as a market leader in the AI computing sector. The company's market capitalization has surged by over $400 billion this year alone, reaching a staggering $1.7 trillion valuation, as investors anticipate continued growth in the AI computing market. The highly anticipated earnings report has drawn attention from both Wall Street and the tech industry, with analysts expressing confidence in Nvidia's ability to sustain momentum. The optimistic guidance provided by the company signals ongoing strong demand for its products. In addition to the positive financial outlook, Nvidia is actively expanding its AI technology beyond traditional data center companies, with recent partnerships aimed at broadening its distribution channels. However, the company faces challenges such as intensifying competition and the emergence of customers developing their own AI chips. Despite these challenges, Nvidia remains proactive in adapting to market dynamics, including navigating export regulations and expanding its presence in key markets like China. The company's strategic initiatives, including the development of compliant chips and continued innovation, underscore its commitment to maintaining its competitive edge in the rapidly evolving semiconductor industry. Overall, Nvidia's latest sales forecast and financial performance reaffirm its position as a dominant force in the AI computing market, with strong growth prospects and a resilient business strategy poised to drive future success. In other automotive news, Mercedes-Benz issued a cautionary statement, signaling that electric vehicles will remain pricier than their combustion engine counterparts for the foreseeable future, as the luxury automaker prepares for a potential slowdown in demand for plug-in cars. In its recent announcement, the company revised its financial outlook for the year, anticipating lower returns due to economic headwinds. Mercedes-Benz also adjusted its expectations for EV sales, particularly focusing on the small and medium segments where it has a limited presence. CEO Ola Källenius emphasized that achieving cost parity between EVs and traditional vehicles will take several years, highlighting the current pricing disparities. Despite these challenges, Mercedes-Benz shares surged by up to 4.6% following the announcement of a €3 billion share buyback program, boosted by better-than-expected cash flow performance. Källenius hinted at the possibility of additional buybacks if the company maintains its strong cash flow generation. However, Mercedes-Benz's strategy to pivot towards selling more high-end vehicles like the S-Class to support profitability and fund the shift to battery technology faces initial hurdles. The company, which previously benefited from pent-up demand, anticipates a normalization of orders this year amid concerns over high living costs and borrowing rates, compounded by competitive pressure from Tesla's frequent price adjustments. Källenius acknowledged the challenging macroeconomic environment, citing lingering effects from higher interest rates and structural challenges in China. The company projects an automaking margin as low as 10% this year, compared to 12.6% in the previous year. Furthermore, Mercedes-Benz and other automakers have adopted a more cautious approach to EV adoption, with sales growth expected to slow down significantly this year. The share of fully electric and plug-in hybrid vehicles in Mercedes sales is forecasted to remain relatively stagnant, prompting a revision of the medium-term outlook for EV penetration. Despite these setbacks, Mercedes-Benz remains optimistic about the potential of its next-generation EVs, slated for release in the mid-2020s. These models, including an electric version of the CLA boasting an impressive range of over 750 kilometers on a single charge, are expected to drive significant progress in the EV market. Kalenius emphasized the nonlinear nature of the auto industry's transformation, acknowledging that it will be marked by peaks and troughs rather than a straightforward progression. That is all the time we have for today. Tune in again tomorrow for the latest news update. Remember to smash the like button and subscribe to our channel.